Canada is experiencing one of the lowest population growths that it has seen in 70 years. And it gets even more extreme when we look at both Ontario and BC, where population in those provinces actually contracted in the first quarter of 2025. These are basically uncharted waters for these provinces that have historically seen population booms and the high house prices that go with it. We all know the outcome of those record-breaking population growth that we saw, 2021 through 2023. Well, now it appears that the pendulum has swung completely to the other side, and where we are now experiencing record low population just within a couple of years. So in this episode, we are going to explore how major the ramifications may be on housing now that the shoe is on the other foot. And first, a bit of a lighter note, bit of a happier note. June 22nd marks the 5-year anniversary of the Vancouver Life Real Estate Podcast and YouTube channel. 5 years. We are currently recording episode number 282 and are very proud to say that we have released a brand new episode every single Saturday since we launched 5 years ago. We have never missed a single week. And to, celebrate this milestone, we have decided to increase the amount of content that we're releasing. And we're doing this by creating 2 new channels about Vancouver real estate. So both Ryan and myself, we've just launched individual channels with a focus on a bit more of a tactical elements of real estate. And this main channel that you're watching now will continue to be in podcast format and bring timely information and top tier guests. And our new channels, well, they're going to get even more into the weeds of how real estate is evolving and how tactical elements are within Vancouver. We have included links to these new channels in the show notes below. Be sure to be one of the first people to follow and enjoy that new content. So Ryan, happy 5th anniversary.
Hey.
All right, so let's dive into the major shift that is happening within Canada, and that is, of course, the deceleration of population growth. As we just saw, it shrunk to one of the lowest levels dating back to the 1940s. StatsCan reported an increase of just over 20,000 people as far as population growth in Q1 of 2025. There are only 2 other quarters in history that have shown weaker growth, 2020, which kind of doesn't count because, of course, the COVID shutdowns, and then 2015 during the global energy turndown. So Q1 of this year was ultimately the second lowest dating back to 1946, which is when the records began. It also marks the 6th straight quarter of slowing growth. And this is largely due to the actual federal government's 2024 decision to scale back in both temporary and permanent immigration levels. They're actually implementing something that is achieving its goal. It's fascinating to watch in real time. So now, while immigration still accounted for all of the growth, given that deaths exceeded births in Canada by over 5,600 in Q1, net immigration, well, it did fall notably. Canada welcomed just over 104,000 immigrants, while non-PRs declined by over 61,000. The non-permanent resident share of our total population now sits at 7.1%. And keep in mind, the government has a quota, a target that they want to reach of 5%. So still quite a ways to go to hit that metric. The government has also cited a need to better align immigration with community capacity, especially as pressures on housing and services mount. What a novel idea and way to think about this after making the major mistake of, quadrupling our population growth might have problems with housing and infrastructure. We're all shocked, I know. But anyway, they've now decided to align population growth with our capacity capabilities. Fantastic. It is understandable if it doesn't necessarily feel like there's less people in our country right away. Because the country, we're still coming off of that record growth, as mentioned, and annual growth still came in at 1.2%, which equals just over 500,000 people year over year. So that's above our historical norms, but we're less than half of that peak we experienced in 2023. So outside of the lockdowns in 2020, annual growth is now more in line with our pre-2016 growth rates. So we're kind of coming back to long-term norms. Now, getting back to those contractions, Ontario saw its population shrink by about 5,700 people and BC about 2,400 people. Now, a quarterly decline is essentially uncharted waters. It's new territory for those 2 provinces. Ontario has never recorded a weaker quarter of growth. Never. And BC has only seen one weaker quarter, again, 2020. Don't know if that even counts. So essentially, both provinces are experiencing something they never have before. Should these levels of non-growth continue, well, we'll see notable shifts in obviously rental rates and then housing prices. I think the bottom line here is that Canada's population growth engine is slowing, and that may shift, and that shift may have significant implications for housing demand, labor markets, economic planning, all types of, well, GDP enforcing elements within our country. And this is a country that doesn't measure GDP per capita. So we might see that dip into recession levels, in the near quarters. It's also important to recognize that with record amount of purpose-built rentals under construction today, rental rates will all but certainly drop even further. So we can expect to see lower rental rates, bigger incentives to move in. We're already seeing 1 or 2, 3 months of free rent offered, and of course, higher vacancy rates. Oh, and of course, a continued exodus of investment capital into other vehicles, right? What mom and pop wants to go and buy a condo as an investment today based on all this information? I think that one-bedroom condo market is going to suffer for some time.
I guess, we've said it many times on the podcast before, Dan, where we've said that we felt like this population growth was one of the biggest supporters of GDP growth in Canada. And I guess we're now going to really find out just what kind of impact that it had on the marketplace. If we continue to ratchet this down, and it won't surprise me at all if all of a sudden we find ourselves in a bit of a pickle. But we also need to go through this. Recessions are a healthy part of the cycle of growth, and we need to recalibrate here. So hopefully it's just not too painful, but we'll see. Speaking of rental rates, let's do a little bit of a rental update here. So having a look here, rental rates have been on the decline for about 18 months now. And further declines will be a direct result of the slowing population growth that we just mentioned, and combined with a spike in purpose-built rental completions as well. Metro Vancouver rental rates are down $114 this month since last year. And this is after a notable $52 drop just last month, bringing the average monthly rent to $2,223. Interestingly, the average furnished rental is only $110 a month more. And this is quite low, as it's typically 20 to 30% higher than what a non-furnished rental would be. And I think this reflects the low desire for that type of rental, but I think it also indicates perhaps a further decline in non-furnished rental rates if that ratio is to maintain. As an investor, you'd be better off renting empty than spending a ton of money on furniture for only a marginal increase in that rate. West Vancouver currently takes the lead for the highest rental rates for one bedrooms at just shy of $2,600, $2,598. North Van moved into second place at $2,473, and Vancouver is in third place at $2,436 a month.
So let's see how population growth reduction is affecting Canadian real estate as a whole, because CREA just released our national real estate data update for the month of May. We want to share the top line numbers with you. So Canadian real estate prices fell for the 6th straight month in a row. And this is on the back of course, increasing inventory, very low sales volumes, and the uncertainty caused by many things, but of course, persistent tariff talks. Prices hit the lowest level in 4 years. Okay, the benchmark price for a home in Canada today, $690,900. That is down 0.2% month over month, hitting the exact same price it was exactly 4 years ago in May of 2021. Year over year prices are down 3.2%, equivalent of $23,000. When we look back to the peak, it's always fun to reference the peak, which happened in February of 2022, peak pricing I'm talking about here. Canadian home prices are down 17.5%. That equates to $146,000 drop. Prices today are the lowest since that peak moving forward. And interestingly, Home sales, though, spoke to a little different metric. They actually climbed month over month. From April to May, home sales volumes increased 3.6%. And that's notable because it is the first gain we've seen dating all the way back to November. This gain was most notable in areas including the Greater Toronto area, Calgary, and Ottawa. Now, go back even further, though, year over year sales are still down by about 4.3%. When we look at new homes listed, that increased about 3% from the month before. And total inventory, not too surprising here, also rose by the same amount, 3.1%. Now, with the total amount of homes available in the country, it just surpassed 200,000 for the first time in some time. We're about 202,000 today. And it's an increase of 13% from this time last year. Big picture, though, we're still 5% below that long-term average, which today equates to about 211,000 active listings. When it comes to what type of market we're in, well, we're still in what's considered a balanced market, having 4.9 months of inventory. And you need about 6.5 months of inventory before you're considered being in a buyer's market. Now, as mentioned, these are stats for Canadian real estate as a whole. But when we break it down by province, it of course paints a very different picture. As you can see here in the chart we'll display, only BC and Ontario show prices that are down year over year. Every other province is higher, and some are much higher. Look at this. Both Manitoba and Newfoundland are both seeing home prices higher by more than 10% from this time last year. Those provinces are clearly experiencing a boom. But of course, because of the size and the volume of BC and Ontario's markets, they understandably pull down the national average.
Maybe, Dan, that we're seeing that because places like Newfoundland and Manitoba's level of affordability is so much lower than the rest of Canada. The people who, at the very least, are trying to stay in Canada are considering Atlantic Canada or the middle of the country for a reprieve in those costs. I wouldn't surprise me at all if that's in fact what we're starting to see. Speaking to affordability, let's touch on the US Fed here because this will impact our marketplace almost as much as it will the US. On Wednesday, the US Federal Reserve held its key interest rates for the fourth consecutive meeting, keeping the benchmark rate at 4.25 to 4.5%. Despite ongoing economic uncertainty, the Fed's still projecting 2 rate cuts in 2025, which is unchanged from its March forecast. However, the Fed is revising its outlook and now expecting higher inflation and slower growth than previously thought. Core inflation is projected at 3.1% for the entire year. That's up from the 2.8% it had earlier forecasted. And while GDP growth now has been downgraded to 1.4% from 1.7%, you got to think, Dan, like, what does that mean for Canada's GDP, right? I mean, the US is the biggest economy in the world. And if they're projecting that kind of drop, Canada's soon to follow, if not a whole lot more. The unemployment rate is expected to rise slightly to 4.5%. And Fed Chair Jerome Powell noted recently that inflation readings have improved, but new tariffs are pushing the prices of goods quite a bit higher, and their full impact remains to be unclear. I think it'll take a number of quarters before we actually see that. As a result, the Fed is taking a wait-and-see approach. That does not surprise me at all. And with policymakers becoming increasingly divided over which direction it should go, some calling for no cuts at all this year, while others are seeing between 1 and 3 cuts. So in short, while rate cuts remain on the table, the path forward is far from certain, especially with inflationary pressures from tariffs, not to mention the $1.5 trillion big, beautiful bill that Donald Trump is about to push through the House. So we'll see what happens here with inflation. But the theme for 2025 certainly appears to be wait and see.
So just like the Fed's uncertainty is dominating Canadian real estate conversations right now. And outside of interest rates, it's one of the biggest drivers of sales volumes or the lack of. So according to some recent data that we're going to share in a chart, the share of current homeowners and prospective buyers who say they don't know whether it's a good time to buy a home, well, it's climbed sharply from 48% in 2023 all the way up to 60% today. I mean, that's clearly a majority, nearly 2 in 3. and they're unable to ultimately form a confident view. And it's not surprising. I mean, everything we just discussed in this segment on this episode is really enforcing that. I mean, you've got sales and prices that are dropping, right? And it's simple human psychology to really only want to buy when others are buying, because that adds a level of certainty. Hey, it must be a good idea if everyone else is doing it, right? And right now we're seeing record low sales volumes, and that is ultimately sidelining most buyers. We talked on tariff and trade pressures, that adds uncertainty. And there was a new poll that revealed about 54% of Canadians that plan to buy within 5 years. Well, about half of those are now saying the cost of living is creating a much harder time for them to save that down payment to the degree they want to, and it's pushing them further down the road. Understandable. Meanwhile, Zoocasa survey found that almost 60% of buyers are postponing for a year or more based on recent updates. Plus, now we've got this population growth deceleration that may postpone people's decisions even further, right? The more population slows, the more prices are going to decline, right? Maybe. And a lot of people might just good old wait and see to find out. So bottom line is that Canada's housing market it's in flux, and to a higher degree than I think we've been used to for maybe all the way back to COVID. Confidence is low. Conditions vary widely. Economic uncertainties, interest rates, and trade. I mean, it can all reshape sentiment in either direction in almost a moment's notice. But for now, it is just frozen, and everyone is on the sidelines waiting and seeing the continued theme of 2025.
You got to think too, Dan, if like you mentioned here, if tariffs actually create that inflationary environment, it could push this even further out too. It's hard to say what's going to happen here, but let's touch on housing starts as well, because this is also a fundamental leading indicator towards price. In British Columbia, starts fell by 29% from last month to 37,455 units. Multifamily starts fell by 33% to basically 32,000 units month over month. Starts in the province were 19% below levels of May of 2024. And year-to-date starts, if you can believe this, in Abbotsford are up 87%. But then you go to Nanaimo and they're down 75%. 45% in Kelowna, 23% in Vancouver, and 12% in Victoria. The 6-month moving average demonstrates this best. It recently peaked in 2023, and the trend has been downwards for 2 years and is a dramatic 30% drop. This downward trend in starts, I think will continue and will hit decade lows likely within the year.
That rate of deceleration is increasing, and I think we're going to see 50, 60% lower numbers within our upcoming months here. Like it's literally dropping off a cliff, and it's going to cause the completion cliff, and it's going to cause a very interesting dynamic around 2028, 29, because they can't ramp them up very quickly. But anyway, thank you so much. That was today's episode. And if you have been enjoying and want to get even more real estate information, our new channels are live. Again, links are in the show notes. Check those out. Please subscribe, and we will continue to bring you all the best and all the very timely information that's happening in BC and Canadian real estate. Thank you so much for tuning in as always, and have a great week. Happy anniversary, everyone.